So somebody asked me why I placed my fib where I placed it when I made a specific call in the Discord. The call was an algo short call. It was right here, and I'm going to show you my thought process, why I placed the fib where I placed it, and what it says in the book, how to place a fib properly, and how to make a trade in real time utilizing a fib retracement tool. So let's just jump right into it. All right, so this is the coin in question, was algo. It was right here. So the first thing I did was I inverted it. Now, actually, first things first. With the fib retracement, you look up how to place it. It will tell you when you have a parabolic move, you have an upward move, you want to place from swing low to swing high to catch the retracement, the pullback. Now, if you have a downward move, you would place the fib from swing high to swing low. Now for this, all right, so this is actually a perfect example of where I would have placed the fib if I was looking to make a trade, enter a trade, or make a trade, right? So here, right here, in this little highlighted area that I'm highlighting, see we have a little consolidation, a little resistance zone. Again, we're inverted, so let's just, but whatever, doesn't matter. You see, I would be looking at this to place my fib because this would be where you would place it. This would be your, in this, this would be the swing high, right? The swing low. So essentially, every swing high, any swing high or swing low is a support or a resistance level. It's of some point, of some, to some extent. So essentially, you can utilize any support or resistance level to place a fib. It doesn't have to be at the absolute bottom or the absolute top. There's a lot of in-betweens when you're making an actual trade. This is very important to know. Okay, so again, this is a realistic scenario where I would have, we see this is actually a bullish pattern right here forming. So place the fib, swing low, swing high. All right, and also where you place it specifically, it really it can vary. It doesn't have to be exact. Some you can be a little bit more exact. Like here, I would be a little bit more specific with the wicks. But at a wick like this, I would not place it all the way at the bottom because the crypto market is highly manipulated, right? So a lot of these wick outs, a lot of these giant fucking wicks are just manipulation, are meaningless. By meaningless, I mean they're just manipulation. They're so placing your indicator at the absolute top when trying to measure out this kind of situation, this kind of position, doesn't always work. I mean, it's something that you get a feel for over time. The more you do it, you'll understand what it is that I am trying to say right now, what it is that I'm trying to convey, because you don't have to put it right at the top of the wick. You can put it, right here for just a quick example. Like right, like these wicks would be a little bit more specific. Like I would put it at the top of these wicks, but I wouldn't necessarily put it at the top of this wick because that is a much more manipulated wick. That's a very pumped up wick, and the same goes for the the downside. All right, back to our scenario a little example. So we have our support. This is a little support area. I'm sorry, this is our resistance. This is our resistance level. I was thinking of the inverted area. So this is our resistance level. So we're placing our fib right here. Also understand that with fib, you can use the crosshairs. You see the crosshairs? I could put it right here if I wanted to. I could put it right here. I got it at the bottom. As you can see, I got it right here, just using the crosshair. So if it's not right on that, it doesn't matter. Like, so just remember, you have the crosshairs, so you can do that. Do whatever you want. But if you see a picture and you don't see it right on there, you don't know why, where it is. That might be, somebody might have just lined it up using the crosshair. So here, and we have it here. See, like, right, this would not really make sense if you just saw this, because, like, well, it's just in the middle of nowhere. But when in fact, it is perfectly lined up with the swing high and the swing low. Okay, so, but let's just move this over for, because it's easier to see. So we have swing low, swing high, sweet chariot. Now, all right. And these extra lines on this fib are our take profit levels. TP1, TP2, TP3. Now, if I had set a target going long here, 72 cents, boom, good, golden, right? Just at like the first instance, boom. But also, just as another example, if I was in the moment in this trade, I probably would not have put it, the fib all the way at the bottom here and all the way at the top here. I probably would have put it maybe like here, here. It's more realistic because I'm not seeing. Let's just assume that. Oh, fuck. Let's assume that this is not here right now, right? So all we have to go on is this pattern formation and these candles. So I would put it here because this is, a bull flag, potential breakout, and so we put our trade right here, entry. And we put our fib roughly around here because this is what we can put it here, whatever. This is a support level. We have a candle forming, boom, support. If we go over here, see resistance this is a level. We'll just put a little line across. Boom. Okay. So now we have the smaller fib. We have the bigger fib. We have the smaller fib. And this is the more realistic take profit zone if we were doing, a short-term trade. It all depends on the kind of trade you are implementing. This is really important. This is really, really important. There are different kinds of trades. There are different types of trades, different types of traders. You have scalpers, you have swing traders, you have your long-term. There's different kinds. So not everything is, a universal thing. Okay, so we have our take profit zones, and this is take profit 3. We just don't have it lined up. Boom. Okay, so we have our take profit levels. Let's assume we buy in here. This is our entry, so we bought in, and we have our stops, and boom. Okay. Well, okay, I didn't mean to enter out the whole thing. All right, so we hit our take profit 1, take profit 2, and we hit our take profit 3 with this wick. As you can see, we hit all of our take profit levels. And then we went straight down, straight down. So this would be a short-term, a swing trade, scalp. A scalp can be a very, very, it could be a 1-second trade, a 30-second trade, a 1-minute trade. There's all different, different kinds of scalp and different time frames for these different trades. So this is how I would place this fib at this point for this kind of trade. We have a bullish pattern formation. We have our take profit 1, 2, 3. So I put it at this swing low area, which is right here, which is a support and resistance level. Right here, see this is resistance, and this candle, boom, bounce off. So as far as where to place your fib, it doesn't always have to be, unless you're looking, to analyze and get like a general sense. But if you're looking to make a trade, this is specifically for a trade and this time frame, this type of time frame. This is how I would place this fib. And as you can see, our TP1, 2, and 3, our TP3 hit, but we would have had to have been watching it to set a to move our our take profit zones. So that's that's an example of that. Okay, that's a real time. Well, it's not exactly real time because it's already in the past, isn't it? All right. So the call that I made specifically in the Discord. So this is the algo chart. There's a call I called for a short. I Alt-I, which inverts the chart, and I did swing high, or swing low to swing high. Again, keep in mind the chart is inverted. Now, I called for short because just like that, this move over here, this looks like a bullish move. Again, if we were looking at the chart, just assume the chart's regular. Me personally, I spot breakouts better than I do downward moves. It's just how my eyes have trained through osmosis. So it's just it is what it is. So I was like, oh, this looks like a move right here that is going to go that way, right? Because we're bull flagging, tagging again, inverted, whatever. So we're bull flagging, but bear flagging, technically, if it was reversed. So I made the short call, placed the fib here and here. Okay, just like I did with the other one. You don't have to go to the top of the wick and go to here. It really doesn't matter. Really doesn't. We'll just go for the sake of argument. We can go in the middle of the wick. Okay. So we have the more drawn out, the bigger fib, which is a little bit longer, a little bit bigger, but this is for the trade right there. Place the fib right here. We have our support or resistance level right here. Boom. So we place it at the bottom of that to here, and we have our take profit levels 1, 2, and 3. Okay, so we have our fib placed. We have our targets set, and we're gonna let's see how it plays out. Okay, so we hit our TP 1, 2, and 3. Look at this wick. That is a hell of a wick. Now we hit on our shorter fib and on the bigger fib that we placed for the lower time frame, so to speak. So as you can see here, we hit our TP 1, 2, and 3 on both fibs. But if we had a TP 4 and 5 on this fib, we would have hit those too potentially if we had set our stop or our TP or take profit perfectly, and if some schmuck was unfortunate enough to buy our order on this wick out, which is what has to happen for your limit order, whether it's a limit buy, limit sell order, to engage. Somebody has to put an order in for the exact same amount. So a lot of times your limit orders can go unchecked, unsold, unbought because of this. So sometimes there were market orders. It's a totally different conversation. Anyway, okay. So that is an example of why I would place the fib there. If you have any questions, please leave a comment, ask, happy to respond and answer. As you can see, that's practical use. Yeah, practical. It's a practical utilization of the fib. Okay, now let's go over to Bitcoin. Let's look at the utilization of the fib on a more macro scale, right? That was how you can utilize fib in a trade, in a real-time trade scenario, because that was a trade that I actually made. I made that call in the Discord that I was shorting algo. So where if we were going to look at the entirety of this bull run, the entirety of this run, where am I going to start this fib retracement, this fib line? Where am I going to start it? That is a good question. So this is, again, this is kind of a subjective thing. It's a subjective thing. What am I, tug? Anyway, so I would start it here at the first pullback, right before we broke through that 20K barrier. So, because I think that was really when we had our first, or our main parabolic move, was when we broke through 20K, right? You would agree? Agreed. Okay. So, look, I don't have to go all the way over, and just to, we can, no, that's not what I want to do. This, so let's just change something. No, damn it, not what I want to do. We change our crosshair. We're gonna make it blue, and we're gonna make it. We'll keep it dotted, but we're gonna make it thicker. We're gonna make it thicker. We're gonna make it blue and thick. You know, yeah. Can you see that? That is. You see the crosshair pretty vividly. I would think. I would hope. It's pretty thick. And you'd have to be pretty thick not to see that. You see what I did there? Because thick, there's, I'll shut up. Okay, so you can just line up the lines with the crosshair. So don't have to be all the way over there. It doesn't have to be. Again, you can do whatever you want. You know, nothing in technical analysis is perfectly set in stone. Okay, there are, I don't care what anybody says. There are certain things that have been figured out. Yes, true. But there are many things that have yet to be figured out, and yet to be, things are meant to be built upon. There have been a lot of foundations that have been created, and foundations are meant to be built on, just like, certain blockchains. That's a whole other rant. But all right. So you see where I started the fib line right here, right before the pullback of the right before the parabolic move, the real boom boom kitty fuck move. You can see it happened over the course of 35 days. It went up 141%. Boom. Okay. And if I started here, you can see the summer dip happens to bounce perfectly off of the 618 retracement, which is the golden ratio, which is the magic number, the golden ratio, the magical number that comes up in all forms of nature, all across the wonderful universe. So it's the magic number, and it just so happens that we dipped right down to that line. So this is a perfect example. Like, look at these lines. Look at these wicks. Jeez, I can't remember my lines. Probably because I don't write scripts. I don't like scripts. It's just a thing. I like free balling. I mean, what? No, not this. That's not what I meant. Okay. So, let's get rid of the volume. You kind of can't really see this wick. So you can see how this wick, Mr. Vic. Look at these Vics. Also, boom, right down to the 618. No, I didn't want to go down. It's interesting, right? It's interesting. All right, let's just go over a bit more. There's an easier way to do that, but or whatever. And now, you know, we're over here. We're over here now. And let's just, you know, if we put a fib here, go with this, swing high, swing low. Does it tell us anything? Yeah. Not really. Let's just say we started here and went to here. You can see right now we're, you know, following along the 382. It's not much. And this is why, you know, you can play around with different areas, different starting points. Because some things kind of just make more sense. And this is kind of where I've always, when I talk about the beginning of the bull run, this area right here is, you know, the starting gate. You know, we had our come up here, we had a little, you know, boom, resistance, little consolidation zone, boom. Then we broke through, parabolic move, massive. That was the real bull run, the bull run, boom, like a fucking race car, just shot up like a rocket ship. You can see how, you know, look at all these wicks, and this is actually the wicks. That is another conversation. That is another thing that I want to talk to you about. And I'm going to make another video specifically about wicks, and something that I noticed a long time ago, and somebody in the Discord asked me a question about, and I told them my personal theory, and it tends to come up more times than not. And as far as the efficacy of it and the accuracy of it, it's relatively accurate. You know, you see how we waked out here. Just a little precursor, just to show you what I'm talking about. You see how we waked out here, right? And this was in May. You know, we came all the way down here, boom, back up. So more times than not, we will go to where that initial wick goes to, just like we did here, like we did here, like we did here, oh no, we haven't done that yet, sorry. But there's potential for it, and it works on the flip side as well. Okay, so I hope that answered some questions. If you have any questions, leave a comment, join the Discord, ask away. There are, you know, you can see that there is a lot of utilization of the Fibonacci retracement, and the age-old question is it the Fibonacci retracement? Is it that, or is it a self-fulfilling prophecy? Is it that because everybody is using the Fibonacci retracement that it becomes a self-fulfilling prophecy? Because we're all using the same tool. Because when you learn technical analysis to trade, the fib tool is generally one of the first things you learn how to do, right? So it begs to reason that everybody knows how to do it, everybody knows how to use it. So if we're all using it, is it actually the tool that is, you know, that we're using? Is it that the 618? Is it this magical mathematical number, or is it us? Are we making it a reality? This is a very interesting question, because I think a lot of the times, I think it is us. We are making it a reality. You know, if you look at a lot of support and resistance levels, they line up perfectly with fib lines. And a lot of people program their bots based off of, you know, support and resistance levels, either, you know, past or relative now. So there's a lot of information. There's a lot of stuff. You know, there's a lot of stuff to go up. Real quick, let's look over here. So if we were right here, let's go boom, boom, right here. That, and now this will be swing low, swing high. We already broke below that, but so let's place the fib here. Swing. What do we got? Now if I had just placed it right here, we'd have take profit right here. Follow the trend. This is actually a pretty strong trend line. A very strong trend line, actually. That's a question, or that's a topic, a conversation for another time. All right, this guy's Stone out.